we have agreed to fully comply with the Geneva Agreement as well.
This is expected to pave the way for a long-term trade agreement between the world's two largest economies.
President Donald Trump posting, "Our deal with China is done, subject to final approval with President Xi and me."
Trump says the U.S. and China finally agreed to a trade deal. The only finishing touch is approval.
But he said full magnets and any necessary rare earths will be supplied upfront by China.
So the idea is we're going to go back and speak to President Trump and make sure he approves it. They're going to go back and speak to President Xi and make sure he approves it.
The deal would remove restrictions on from Chinese exports of rare earth minerals, as well as some recent U.S.
Folks, this is about the numbers. This is what we need. This is what you need. This is Alice in Wonderland levels of ridiculousness that we've been going through for the past couple of months.
Hello, everyone, and welcome to Geopolitics and Money. Why the United States-China rare earth deal changes everything, but still leaves you vulnerable. A question that is worth asking. On June 11th, 2025 of this year, something big just happened, and most people missed it. The US and China reached a fragile new deal for the next 6 months. China has agreed to resume exporting rare earth elements to the US, including the powerful magnets that are critical for electric vehicles, smartphones, and even advanced missile systems. At first glance, it looks like a win for America, but dig a little bit deeper and you will see the truth. This isn't a solution. It's a 6 months delay on a looming crisis because the US isn't fixing the problem. It's outsourcing it once again. A big thank you to today's show sponsor, Gold Mining Inc. Now, let's break this down as to what just happened. This week, at a high-level meeting in London, the United States and China struck a narrow agreement by which China will resume exports of rare earth minerals and magnets to the United States, but only for the next 6 months. And in exchange, the US will continue imposing 55% tariffs on Chinese goods. At face value, it sounds like progress, but here is what the headlines aren't telling you. This deal doesn't solve anything. It just kicks the can down the road. Trump posted on Truth social media, and I quote, "Magnets or full magnets and any necessary rare earth will be supplied upfront by China," end of quote. That may sound to you reassuring, but here is the reality. We are still not making them ourselves. And that leaves the entire American economy and its national defense dependent on the goodwill of its largest strategic competitor, China. So why this deal might look like a victory? It's really just a warning. The clock is ticking. What are the rare earth and why do they matter? Rare earth elements are the invisible engines of modern life. They power electric vehicles, motors, wind turbines, smartphones, MRI machines, and nearly every advanced defense system in the US military, including fighter jets and guided missile systems. Here's the issue. China dominates the global supply chain. China also controls around 60% of global rare earth reserves, over 85% of the world's refining capacity, and more than 95% of all rare earth magnets production. In fact, even when rare earth elements are mined in the US, like at Mountain Pass in California, they are still shipped to China for processing and refinement. So what does that mean? You may ask. It means that almost every major technology we rely on is built on foreign-controlled foundation. Yes, the new agreement allows rare earth exports for new, but only for 6 months. After that, everything is back for negotiations. And even during that window, China maintains control. There are still issues. The export licenses, for example, they can slow walk shipments or they can hold them altogether, just like they did to Japan in 2010. When they did that, prices of rare earth elements exploded. For example, neodymium jumped over 750%, and dysprosium soared over 200%. And the world realized too late just how powerful China's grip has become. So what does it mean for you? This isn't just a policy issue. It affects real people in real ways. If the deal collapses or if tensions rise again, expect to see the following: higher EV prices, smartphone delays, slower access to medical technology, and increased costs for anything involving precision magnets. And the United States military, what about that? It is still dependent on a rival nation for mission-critical components. That's not just inconvenient, it's dangerous. So what's need to happen next? If the US is serious about fixing this, here's what it needs to do. 1. Build a full mine-to-magnet supply chain domestically. 2. Invest in refining and magnet production infrastructure. 3. Partner with allies like Australia, Canada, and Southeast Asia. 4. Create industrial incentives, for example, tax breaks, subsidies, and price supports. And 5. Stockpile essential metals and expand rare earth recycling programs. Otherwise, this 6 months deal is just a temporary reprieve before the next economic or geopolitical shock. We are just seeing how vulnerable the United States remain when it relies on China for rare earth minerals. Now, let's shift our focus to another resource that quietly experiencing seismic changes right now, and that is gold. As of June 12, 2025, spot gold is trading around $3,385 an ounce, not $2,300. That's 29% real value to date. Investors have poured in gold aimed at a weakening dollar, Middle Eastern tensions, and growing economic uncertainty. But here is what most people miss. China isn't just buying gold. They are actively shaping its price. The People's Bank of China added about 12.8 tons in Q1 of this year, lifting reserves to about 2,292 tons. On top of that, Chinese retail gold funds surges with about 29 tons inflow in early April, a clear sign that gold demand in Asia is stubbornly strong. And perhaps most strategically is that Shanghai is pushing a gold price benchmark which meant to rival London's, giving China a real influence over global gold value. So just as we depend on material from China for our technology and defense, the gold we rely on for financial security is now being quietly influenced and possibly controlled by Beijing. The possibility is there. With that in mind, it's vital to think not just about exposure, but ownership. This leads me to talk about today's sponsor, Gold Mining Inc., a company that is helping investors not only ride the wave of gold's resurgence, but actually own a piece of the ground where this new gold story is being written. Once again, today's sponsor, Gold Mining Inc., stock ticker is GLDG, which is, by the way, traded on the New York Stock Exchange. This isn't just another junior miner. Gold Mining owns one of the largest gold and gold-copper resource stage mineral portfolios in the Americas. We're talking some dozen projects across 5 countries located in pro-mining jurisdictions in Canada, the United States, Brazil, Colombia, and Peru, with an estimated 12.4 million ounces of gold equivalent in the measured and AMO indicated category and an additional 9.1 million ounces of gold equivalent in the inferred category. But wait a minute. The company doesn't just own resource stage mineral properties. It also has a portfolio of publicly traded equities and cash. Gold Mining has grown its portfolio of publicly traded securities to over $150 million based on the market closing price of those securities on June 12, 2025. This now surpasses the current market cap of the entire company. The marketable securities comprise entities from spinouts and an option agreement, including 13% of Gold Royalty Corp, GROY, 79% US Gold Mining Inc., USGO, and 22% of NAVGold, NAUV, forming a solid financial foundation. An additional $6.8 million of cash and equivalent as of last recorded quarter and financials on February 28, 2025, which include, by the way, 9.9 million shares of USGO are quoted at $95.2 million US dollars. 21.5 million shares of GROY are quoted at $49.1 million US dollars. 25.9 million shares of NAV are quoted at $6.4 million US dollars. The total equities holding valued at $150.7 million US dollars. Once again, Gold Mining, stock ticker GLDG, and it is traded on the New York Stock Exchange. Gold Mining is focused on advancing key projects such as its São Jorge projects in Pará State in Brazil. The company has just initiated the largest exploration program in the history of the company. And this one was at São Jorge, as we see in this picture on the graph, which is an open pit resource with regional growth potential in about 46,000 hectare land package. Gold Mining is on trend from Tucani-Tinzinho G Mining, which has the same style of mineralization, but has been much more extensively drilled, about 400 plus meter depth, with 30 million ounces of reported production over 40 years in an area of approximately 90,000 square kilometers. While Gold Mining has much less drilling, most only about 200 meter depth. The information on Tucani-Tinzinho is important to understand the region, obviously. Its project is different, and proximity is not indicative that São Jorge will have the same result. The São Jorge project is also ideally situated within 2 to 3 kilometers of paved highway and power available from G Mining Tucani-Tinzinho and Serabia's nearby Palito mine. There are 4 key points I need you to understand. 1. Record gold prices. The stock market gold prices have been on a historic run, recently crossing the $3,300 per ounce mark, setting a new all-time high. Yet, despite this surge in the price of metal, many gold mining stocks have not followed suit. For some investors, this disconnect could represent an opportunity. As you can see in the graph, gold stocks have a tremendous gap to close, and this one compared with the gold spot price, which has soared in the opposite direction. Companies with a strong project portfolios and solid financial structure like GLDG may be well positioned if investors' sentiments begin to shift back towards the sector. 2. Gold reserves must be replenished. Size, quality, and location matter. One of the biggest challenges facing the gold industry today is reserve replacements. Large mining companies need new discoveries to replace the ounces they are producing, but exploration spending has lagged, and new major discoveries are becoming increasingly rare. And that's where companies like Gold Mining Inc. may come into focus. Size, quality, and location matters. The gold mining portfolio includes increasingly scarce, large-scale gold and gold-copper projects in mining-friendly jurisdiction, just what the major operators will need to replenish reserves mined through production. Back in 2010 to 2012, the combined peak market cap of the companies that previously owned the assets in the gold mining portfolio was approximately 850 million Canadian dollars. And that's back when the Canadian dollar was much closer to par with the US dollar. Fast forward to 2025, and gold mining's entire market cap is around 150 million US dollars. So despite gold prices climbing from 1,925 in 2011 to 3,300 recently. So why does this gap matter? These are large-scale projects in safe jurisdictions with infrastructure advantages and, of course, a management team with a deep experience in building value over time. Gold mining may be in a strong position to benefit from this trend. For example, Yellowknife Gold Project, which is in Canada, Lamina Gold Copper Project, which is in Colombia. Number 3, experienced leadership team. Gold mining has a strong leadership team led by industry experts with decades of experience, successfully growing and operating mining companies, led by co-chairman David Garofalo, who was the ex-Gold Corp CEO, in addition to Amir Adnani, a serial success story, and ex-Newmount executives. This team has proven records of success. Insiders own over 5% of the company. They have a real skin in the game. Number 4, lastly, look at the key shareholders of the Gold Mining Inc. You have Ruffer, BlackRock, Sprott, Morgan Stanley, GDXJ, ETF, UBS, and Goldman Sachs. Managements and insiders have a real skin in the game collectively, owning over 10 million shares, or approximately 5.15% of the company as of May 12, 2025. Check out Gold Mining Inc., a New York Stock Exchange, and their stock ticker GLDG. Now, if you are looking at companies with leverage to gold prices and a long-term development strategy, GLDG may be worth a closer look. As always, make sure to review gold mining public filings for important information regarding it and its projects, including its most recent annual information form and technical reports, which was referenced in them. So, check out Gold Mining stock ticker GLDG, and visit their website goldmining.com and do your own research. As always, remember, there are always risks with investments and there are no guarantees. Thank you.